Hey everybody, this is Mike Campos with San Diego Funding, and I'm with Gary Massa with Pacific Sotheby's International Realty. And today we're going to address some of the most frequently asked questions that home buyers and sellers have been asking both of us in the last couple of weeks. So Gary, you're first. What is the biggest fear in real estate today?
Yeah, great question, Mike. And I think the number one question that's been coming up most often from a lot of my clients is the concern that we may be nearing the top of our market or a peak market environment. And realistically, the answer is we may be getting close. I don't have a crystal ball, and neither does anybody else. However, we can all admit that over the last 7-8 years that, we've had, price increase year over year over year, and prices are starting to feel pretty high, not just in our market, but maybe even across the United States, right? So is there any more room to go up? Possibly. But at the end of the day, Mike, it's really all individual specific to, people's certain goals and circumstances. I don't believe for a second that people should wait, a couple years to see how the market may shake out. We just encountered or went through like 100-year catastrophic, downturn in the market. Do we see that happening again? I really don't. There's a lot of fundamental things that's different about this time, but again, we're always going to have our cycles. And if it makes sense for buyers right now and you're ready and it makes sense for you or your family to, to get that larger house, downsize, make the move you're going to have to move, don't be afraid of making, of buying a home. You've got to just make sure you're making the right decisions and you're evaluating it from all different angles. And again, just make sure you're being responsible about it with getting the right loan, making sure you're buying the right property, and making sure that you're going to be able to be in the home for the long term, right? If you're in it for 5 to 7 years, or you have that 5, 7 to 10-year plan, you should be able to weather any part of the of the cycles to make sure that you protect your investment and you're either selling at the right time or whatever the case.
Here in San Diego, in a lot of areas in California, we have low inventory. Mm-hmm. There is a demand to live here in California still, so there is a challenge to have home ownership in these areas. As you mentioned, in the last 10 years, mortgage lending has been relatively conservative, to say nicely, where we have to fully vet and fully document basically any buyer who's purchasing real estate. And almost all of these transactions have required a down payment of some sort. So most homeowners that are owned today have skin in the game. Right. They most likely have a 30-year fixed. So even if the stock market or any other types of economic factor had a shift for a different direction, people's payments are going to stay the same. Right. And moving forward, we have an economy that has a philosophy of growth moving forward for at least the next 2 to 6 years.
Mike, I've seen the numbers that our economy is doing well, like, consumer spending is still doing really well. Right now our inventory levels are starting to come up a little bit. Homes are starting to accumulate on the market a little bit longer, which is actually a positive thing. People are seeing this as a very negative or scary thing that the market's changing. However, it's giving more options to the homeowners because the last few years we haven't had any homes to sell, right? So now people that need to make those moves, while the market may be kind of leveling off, there's more opportunities for them. And I think you said it right. Like, one of the questions that I've heard is, are we in a mortgage bubble? And I mean, from what you said, is that lending's been a little bit more responsible recently. There's more equity in homes. And so if there's some sort of shift in our economy, people's mortgages aren't going to adjust, giving them a higher payment. They're going to stay pretty much the same. And at the end of the day, if they can weather the storm, there's not going to be a whole lot of negative equity out there. That's
right. So, in the last 10 years, mortgages that have been funded have been very heavily regulated by the CFPB, the Consumer Finance Bureau. And we've had to document, per their requirements, the buyer's ability to repay back that debt. Using tax returns and pay stubs, we've had to have buyers bring in a down payment compared to in the past where we didn't have to do any of that stuff. So these homeowners that are in properties today are well vetted, and because of the terms of the loans, whether it's a 30-year fixed or even our short-term adjustable loans, they have security measures in place to protect the home buyer homeowner from possible default or not affording the payment in the future.
Mike, the other thing too is we were talking about mortgage guidelines expanding, right? Being able to make it a little easier for people to qualify for loans, making payments a little bit less, which may also, I mean, again, still being responsible financing, setting a great foundation for our industry here, but also may help kind of continue to push the progression of home values and home sales at a much more reasonable, slower paced rate into the future.
Right. So another question of the week is how do we afford these properties as values continue to appreciate?
Right.
So we in this marketplace have had our investors, our banks, loosen up the guidelines little by little with more reasonable accommodations for home buyers. So if you're self-employed and your tax returns may not be superior, or if your tax returns might not disclose all of the income that you earn, we're allowed to utilize bank statements in lieu of tax returns to help people get approved. So we're still following the underwriting requirements of documenting the customer's ability to repay back a debt, but with alternative documentation. Now in this marketplace, some lenders are more forgiving and more liberal with regards to customers' previous credit report delinquencies, whether it's a foreclosure or a bankruptcy or a short sale or a simple 30-day late.
Right.
Now is not the end of the world for home buyers to move into a property.
Okay. So, I mean, I guess what we're saying is, if you're interested in buying a home, figure out how it affects you specifically, instead of thinking about what was 4, 5, 10 years ago, 6 months ago. Things are changing, and it could be more easier to attain than you think.
That's right. So if you like more information about the overall U.S. economy and what direction real estate's going, feel free to reach out to either one of us. We're happy to take your call, and we look forward to talking to you soon.
Thanks again. Bye-bye.